Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Beverage Corporation. Before I introduce our speakers, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with Flow Beverage, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Nicholas Reichenbach, founder, chairman, and CEO, and Trent McDonald, chief financial officer of Flow Beverage Corporation, which trades on the OTCQX Best Market under the symbol FLWBF and on the TSX under the symbol FLOW. Welcome, Nicholas and Trent.
Thank you. We're excited to be at the OTC conference this year. So much appreciated for the invite. My name is Nicholas Reichenbach, the founder and chairman and CEO of Flow, together with Trent McDonald, our CFO. For this presentation. This presentation is our Q3 earnings call presentation that was delivered in September. And our next formal earnings call will be at some point in January, where we'll announce our year-end and Q4 results. This is our lovely disclaimer about forward statements and financial measurements. So the story of Flow. I founded Flow in 2014. In fact, only 2 days ago was our 8th year. So we're in our 8th year of operation. I founded on the back of my family owning a very large artesian mineral water spring here in Ontario, Canada, that releases over 3 million liters a day of the highest quality still mineral water. We decided to do something different with our spring and mineral water. We decided to put it in a environmentally friendlier package, not made from plastic. So we chose our partner Tetra Pak, which this format right here is called the Tetra Prisma, which is primarily made from paperboard and sugarcane. So a renewable resource that's better for you, better for the planet. We launched the company in 2015 against of the wellness consumer. And over the course of the last 7 years, we've managed to hit incredible growth. And we have great product market fit against this core consumer. And we have the highest net promoter score for most beverage companies with customer loyalty, even some higher than some of the best brands in North America. And that relates to a very loyal customer that purchases Flow products against their wellness regime and their family. Our portfolio of products that we've expanded over the 7 years have included our 1 liter, which is our champion SKU. This is the highest selling SKU of Flow. We sell it in multi-packs as well as 12 packs at most of our grocery stores, food and drug and mass stores. We also have the world's first organic certified mineral water, flavored mineral water. We use USDA organic certification and products to infuse beautiful essential oils inside our products that have an amazing, sophisticated taste profile like cucumber mint, lemon ginger, strawberry rose, watermelon lime, and blackberry hibiscus. And our new flavor, it's peach blueberry, our newest flavor. We also have a line of collagen waters that have 10 grams of the highest grass-fed bovine collagen infused in with natural flavors, and we have 6 of those flavors. The segment that Flow has expanded in, and really where all of our growth came from in the last 7 years are the sustainable package growth, the premium enhanced water category, and the functional enhanced water category. All of the growth of those segments over the course of the last 3 years have almost doubled the existing product growth in that segment, such as shelf-stable water, non-sustainable packaged water, and functional beverages. The sustainable packaged water over the last even 12 months has now hit almost triple-digit growth rates. From the last reported quarter is almost 80% growth rate. And this comes into line with consumers' intent to purchase products that are not only better for you, but better for the planet. We have a very high ESG rating and score. We do our NASDAQ 1 reporting, SASB, but we also do B Corp certification, and we're a B Corp company. And we have one of the highest, best in the world B Corp scores across all industries, not just beverage. We definitely have the highest in beverage. And we're in the top 5 percentile of the certifications. And what drives this high score and the NASDAQ 1 report is that we go beyond the plastic bottle and use renewable resources, fully recyclable resources in our materials. Right now, we have 75% plant-based, and we're moving towards 100% by 2030. Our carbon neutrality, we operate carbon neutral with sourcing 100% renewable energy from our 2 facilities, and we're also a partner with Amazon on their climate pledges. We protect our source. We have 2 sources of water, one in Ontario, Canada, that now is owned by Flow, that was my family's, and another in the beautiful state of Virginia, in the Shenandoah Valley, that is a twin spring equal to the quality, taste, and chemistry of Flow's water, as well as it releases over 3 million liters a day of fully renewable, sustainable abstraction. Oops. Our distribution growth since the company launched in 2015 with our one of our largest retail partners, Whole Foods. And they launched a brand in the natural grocery category in Canada. Then we signed all the major grocery stores and drug stores in Canada, making it a national success and brand, and outselling our competitors on cash for points of distribution. At that point, we went into the US, and Whole Foods expanded our SKU count and launched us across all of their stores globally. When we moved into the US, we also built our first Tetra Pak facility, where we have it in Canada, in Toronto, the GTA. We have a Tetra Pak facility with 3 Tetra lines with the capacity to produce over 9 million packs a month. Out of it, we got our first B Corp certification, and then we launched our organic flavored water in the US, and that's when we hit hockey stick growth. Also signing on strategic partners with Amazon, Sprouts, Costco, and other Safeway and other leading US retailers. Then moving into the collagen brand, launching that across all of our natural grocery, moving into food, drug, and mass in the US with CVS and Gordon Food Services, US Foods, GNC, and other beautiful, great retailers across the entire United States of America. At that point, we built our second facility, as I mentioned before. This facility is operating in Virginia in the Shenandoah Valley with our spring, and it currently has 5 Tetra lines, producing about the capacity to produce 15 million packs a month. And so building the asset base, launching a domestically sourced and responsibly packaged water was really a catapult to driving additional growth in food, drug, and mass. where we fanned out to over an ACV of over 21 points, which is a really solid launch, and we've got a lot of growth ahead. And we also launched our DSD model with the bottler Pepsi in the Northeast region, as well as strategic partnerships with Office Depot to fulfill our e-com business that had been growing rapidly over the course of the last 4 years. And then also launching, with our entered into food service with Accor hotel chains across North America and the Caribbean, as well as a new distribution agreement that we've launched with Primo, one of the world's largest water distribution and product companies. Right at this point, our distribution is 36,464, with the vast majority of that going into the U.S. And Canada. We are very well penetrated with an ACV of over 65%. ACV stands for all commodity volumes, which is a percentage of market share. So very well fortified in Canada with growth, but the U.S. is where the growth and distribution is, and the focus is coming from. These are MULO stats, which are data on how the velocity of the products are doing at retail. And as you can see, we're one of the fastest growing brands year-over-year growth in both the U.S. channels, which is food, drug, and mass, with 29% growth. And within the natural channel, with 3% growth, which is a very good sign because we're very heavily penetrated in that market. And then in Canada, with food, drug, and mass, natural, and gas and convenience, we're at 32% growth on our velocity at retail shelves. We are the number one cartoned water company in the world, and in the United States and Canada. As of Q3, we had a 43% market share in all cartoned water. Some of the achievements for those that haven't listened to Flow in the past, over the course of the last fiscal period that just ended October 31st, but this achievements were up to Q3, which ended July 31st. We gained market share in the carton. We gained market share in cartons and became the number one. We expanded to over 36,000 locations. We have now successfully launched our new product line, which is called infused vitamin water. So it's Flow infused vitamin water. The first 3 SKUs are focused on immunity, which give you your daily dose of vitamin C and zinc, which delivers it with 0 sugar, organic certification, and no calories. So we're very excited about this product launch. It's already launched at leading retailers in the US and is about to launch in Canada in January. We also launched 1 liter SKUs in flavors at Sprouts, one of our leading retailers in the US. We entered into several food service contracts, one with our Norwegian Cruise Line to have Flow exclusively carried across all of their 29 ships globally, and have a really fantastic partnership with them, as well as Accor, one of the leading luxury hotel brands, where we've launched in the United States and Canada in banners such as the Fairmont, Sofitel, SLS, and others. We also secured distribution in the Caribbean and Central America, which is our next geographical expansion. And we became the official water partner for Blade Urban Mobility, which is an incredible service that does helicopter transportation in the United States and Canada, and I believe now globally. We signed a distribution deal with Primo, which I'll talk about later, and launched our 501 liter in R1, which is one of the leading Southern California natural grocery retailers. So we're very proud about that. At this point, I'll hand it over to Trent McDonald, our CFO, to go through our financial highlights of Q3.
Thank you, Nicholas. Appreciate the intro. So look, we're starting to do very well at top line. We've always had significant growth, but for our part, we have been exceeding industry growth by quite a bit. And we've been focusing on our Flow brand versus co-pack. Co-pack has always been opportunistic. It's been something that allows us to create absorption for the capacity that we have between Verona and Aurora. These are our two plants. But as Flow has continued to increase, consumer uptake has been accelerating. We have been continuing to focus on the entire brand, and Flow has been growing at a significant rate. So if you look at our Q3 and where you see this is that our year-over-year increase in sales on the Flow brand itself is 36%. Again, significantly higher than industry for premium water. We have 18.6 million year to date in sales off of the 8.6 million for Q3, which is a 21% increase from the year to date 1 year ago up to that point. Lots of drivers for that, specifically better and more points of distribution, new stores, and our e-commerce, as we have direct to consumer delivery through our e-commerce platform. And I would encourage anybody listening here today to seek that out and start doing that for yourselves. Our gross margins are also improving. So we've been doing a lot of things to improve the gross margins, specifically around how we operate and the operational efficiencies we're getting out of our two facilities. As a result of that and increased volume, we have been able to get our margins up to 28% in Q3 of 2022 versus 22% in the same quarter of the prior year. Significant increases. We also have 23% year to date versus 28% year prior, but that was as a result of one or two quarters as we adjusted our production. But now, as you can see in the current quarter, things are really starting to take place that are promising for the future. Our EBITDA loss improvement, we're up 42% in our EBITDA in improvement over the prior year, over Q3 of prior year, and 39% improvement year to date. So these are not insignificant. And as you know, our goal is to drive the company forward towards profitability. And you can see that there is momentum coming into the organization. Again, just to talk about some sales, our Flow branded revenue is what we're really focusing on. And you can see this in the 3 months ended July 31st, 2022, our most recent quarter. Our gross revenue is 14.9, net 12.7, which in itself is an increase over prior year. But more importantly, you can see the Flow branded retail e-commerce net revenue went up to 8.6, coming off a base of 6.4, while co-packing went down. So while our sales went up, the mix is significantly different. If you go over to the fourth column, you can see that the 9 months ending July 31st, 2021, co-pack was marginally higher than Flow brand. And if you compare that to the most recent quarter of 8.6 to 4.1, you can see what we're talking about in terms of our focus on the Flow brand and what you can expect going forward. Gross margin, again, improvements in, we've had improvement in our trade spend, making the most of our investments on things like, regular trade programs, everyday listings, program support, in-store merchandising. And so we have really improved our ability to get a great LOI on these spends. And they have been coming down as a percentage of the gross sale. And as a result, we have been getting better COGS, in addition to, of course, what I spoke to a couple seconds ago, our ability to run a more efficient production process in both of our two facilities. Our sales and marketing spend has come down, and that is as a result of not an investment in sales and marketing. In fact, we feel we're investing quite heavily, especially as a percent of gross sales. But it is actually as a result of some of the things we've done around how team is structured, what we do in terms of brokerage costs and things of that nature. And we've been getting just as much or more momentum as we would have anticipated with a lower actual spend in terms of dollars and percent. So it's a good news story. Our general administrative are up over the last year, 4.6 to 3.9, because of a few sort of what I'd call one-time expenses that come into the P&L in the quarter. Our goal over the coming quarters and years is to really focus on SG&A, to bring that down to what we believe to be a reasonable and rational percentage of our total net revenue. That will allow us to continue to improve our EBITDA and get to a positive cash flow and eventually, obviously, positive income. So we have been doing a lot around that internally, and hopefully we'll have better news to continue to come out with around that as the quarters continue to be disclosed. So that is really what I wanted to focus on today, just to give a sense of where we are headed, without giving any guidance, but seeing exactly the kinds of improvements that have been made in the last quarter and our goals in the coming quarters in relation to costs and sales and margins, and the focus again on the Flow brand itself. At that, I'm going to pass it back over to Nicholas.
Thanks a lot, Trent. I will focus on only one more slide, and then we can open to Q&A. I just wanted to say that we are the proud sponsors of the New York Marathon that's happening in New York this weekend and on November 6th. And if you're in the New York area, you'll see Flow co-branded products being sold all across the tri-state area, as well as Flow will be sampled out to all of the participants in the race throughout the race, keeping them happy, hydrated, and healthy as they come again on this spectacular annual event. And we're very excited about the partnership ahead this weekend, and just want to congratulate all of the people participating in the New York Marathon. It's a journey and a half, and we're looking forward to the race this weekend. At that point, we can open it up for Q&A. And I'll let Trent take the lead on the questions.
Yes, thanks, Nick. So we have one question. I'll read the question. What are your growth drivers over the next few years? Great question. So, look, one of the things that we pride ourselves on is the consumer uptake. We have very, very passionate consumers who love the brand. And our drivers are going to be a combination of a few things. Number one is distribution points. We want to continue to expand our footprint within the United States and, in fact, here in Canada. We also are driving what we call food service partnerships. And what that does is drive trial. And so if you think about things like Norwegian Cruise Lines, Accor hotels, what happens is with those exclusive partnerships, when you're on a Norwegian cruise or staying in an Accor hotel, you are being provided with our water, Flow water, and it drives that trial so that you can seek that out after the fact if you enjoy it, and I can guarantee you're going to enjoy it. So that is one of the things that we are doing, and a couple of the key drivers. So we're going to continue to focus on really great partnerships, and hopefully we'll be able to announce some more of those as we go forward, in addition to further points of distribution. And I think organic growth is just going to continue, not only within the distribution points we already see ourselves. So those are the biggest ones. Another question, any prediction on when we have positive earnings? Well, look, that's a common question that you would see from an interested investor. So I'm actually glad that you're interested in that and paying attention. We will not be giving any guidance, but I can tell you this: you have our commitment as an organization, as management, to continue to push forward and do the things we see are necessary to optimize our organization such that we are, decreasing our cost of goods, increasing our margins, and controlling the spend below gross margin to try to improve EBITDA and eventually get to positive income. And while I can't say when that will be, I can tell you that we are going to try to do that on an accelerated pace, so that we have a great set of news to tell people. But obviously, there's always risk whether or not we can achieve that. But that is certainly our goal. What is the indication of early demand for the newly launched vitamin water lineup in the U.S.? I'm going to give that over to Nicholas. Yep. Nicholas, if you want to give some indication of vitamin water demand.
Yeah, that's great. A great question. Well, first and foremost, this product tastes fantastic. And so we launched in September at the world's largest natural grocery expo called Expo East and Expo West. So we launched at Expo East the vitamin water in September, late September, to all of our retail partners and to all of the natural grocery retailers. And so far, we've had a very good uptake on the brand and feedback from our existing distribution paths, which are in natural grocery. So we're going to focus on launching this product because of its organic certification, clean ingredients, and environmentally friendlier package. We're going to launch it similar to how we launch all of our products in natural groceries and on e-com, which amounts to the majority of our sales. And we've gotten great feedback, and we have launch programs across the entire United States of America, coast to coast, that will be fanned out over the course of the next quarter. Equally in Canada, we launched in September. We launched to the trade in September at our largest natural grocery expo, which is called CHFA. I was there personally for both of the events, and the response we got back from the Canadian launch of our vitamin-infused water was really outstanding. All of our major retailers were there, and they are very excited about launching all 3 SKUs across the vast majority of our distribution network in Canada. So we're expecting very large things about the vitamin-infused product line. And the innovation that we provided to the market seems to have a very good feedback, and early indications would say that this is going to be a very solid product for us moving forward financially.
Thanks, Nicholas. So another question that came in: what is your competitive advantage over other boxed waters, and how do you think the celebrity ownership affects you? So Nicholas, I'll hand that back over to you as well.
Yeah, so Flow has a lot of celebrity shareholders that have invested as a private company, and I don't know, maybe more as a public company. They've had a very special relationship with Flow, all organic in nature. They're all full of customers to begin with, and very passionate about the brand. And they help promote Flow. We've gotten billions and billions of impressions from our own campaigns and their support over the course of the last, since 2017. So this has been one of our main ways of really maximizing brand exposure, but also just sharing their experience with Flow and understanding that customer love that Trent was talking about, to having influence over and super influencing over social media. So it's been pretty important to us to combine our strength with our shareholders. And we have lots of other shareholders. You don't have to be a celebrity to be a Flow lover and a supporter. We really like to engage with our shareholders and help them support the company and us with promotions. Our competitive advantage in the water space, in the carton water space, is that this package was designed and exclusively held by Flow for many, many years, and it still is. And this package has 2 advantages over all the other cartons. Mainly the inner liner of our carton here it's specifically made for our water paperboard. So it keeps the taste quality of the water completely intact and no microplastics involved in it. And this package never sees air or water. It's aseptic, shelf stable. So the taste of Flow and you can mark my words on it because I've been drinking Flow since I was born, right out of the spring with my hands. The taste of Flow tastes identical to when it comes out of the spring. And that was one of the biggest things with the product, is that 65% of our users drink Flow because they love the taste.
And that's
I think we're out of time.
Yeah, I think we're out of time. So go ahead, Nick.
Thank you very much, everyone. Enjoy the weekend and the weather in New York and the marathon, if those are watching or participating.